Well, welcome, everybody. Thank you for joining us. My name's Simon Cox. I'm a journalist for the Economist magazine, and I'm delighted to be joined by Alicia Garcia-Herrero, who is chief economist for Asia Pacific for Natixis, and also, I understand, an adjunct professor at HKUST here in Hong Kong. We're going to talk about whether China's reopening will save the world economy. So I hope by the end of our conversation you'll have a satisfying answer to that question. Some of you may think we've already given away the answer to that question in the description for this event, because if you read the description, you'll notice there's this very striking statistic that China's economy, together with India's, will drive half of global growth this year. It's a pretty impressive figure. But what I think many people get confused about is the distinction between China's contribution to world growth and China's contribution to the rest of the world's growth. Those are two rather different questions. To illustrate the difference, I'd like to use an analogy if I can. I have a child, a daughter. She's 5 years old. She's growing very fast, like China. In fact, I can say with some confidence that she contributed 100% of the growth in stature of our household last year, because I'm not getting any taller. In fact, I think I'm shrinking a bit. And my wife is not getting taller either. But how much did she contribute to the rest of the household's growth? Well, the answer is 0%. There were no spillovers from her growth to ours. In fact, if there were probably negative. So similarly with China, we can talk about its growth, its contribution to the world as a part of the global economy. But what might be more interesting is to talk about the spillovers from China to the rest of the world. So Alicia, welcome. Perhaps we could start with China itself. How do you see its growth evolving this year?
Well, first, thank you for, after what you said, I guess, it's all clear that, yes, China is growing, but we shouldn't care, given that, we can't get any of that heightening impact from China's growth. But I have to say it's not so simple as the example you offered. So let me start by answering the first question to the extent it is possible. We'll get data tomorrow, so we don't have anything to talk about today other than basically, high-frequency data. It's not the data you probably see in terms of, retail sales. We have here some weekly retail sales, and I'll show you a little bit of graphs, and then I'll try to answer. I think the answer is, as Li Chan put it very bluntly, it's going to be hard to grow even 5%. Oh my God, we all thought that was a low target. And the reason is that, yes, the recovery is there, but it's bumpy, and it's not very stable. Maybe that's the way I would put it. And it's not very stable because, by the way, the rest of the world is not helping. Maybe your daughter is not giving you any, but you're not giving her anything, and that's what in a way the world is doing with China. We're not importing, and we're creating lots of issues, as you can see from the news lately. So a lot of financial volatility, and all of that isn't helping. So that's the situation. So on the one hand, whatever is only China related, consumption should be the answer. The answer. That's what you get anywhere after reopening. But consumption is going up slowly, only slowly, steadily, and certainly whatever is consumer durables, the most obvious example is autos, which is about, I think, 16% of retail sales. So it's a big chunk of retail sales. It's collapsing. It is just not, there was a little bit of an upside when the reopening started, but it's not. And you can read, I'm sure, there was an interesting article on Caixin on how much automakers, including EVs, are pushing prices down just to be able to sell something. So I would say that, to make a long story short, disposable income is the problem in China. I mean, there's not just enough support of disposable income. Forget about this amazing, additional savings that people try to calculate. If your income has not grown for 3 years, you're not going to spend just like that. And by the way, this is different for China, the US, and Europe after reopening. The US and Europe went through massive stimulus. people had money in their pockets. They had received all kinds of, subsidies. China did not do that. So I think people are as eager to spend. The one thing that will go well is domestic tourism. So flights operating inside the mainland, amazing. Outside the mainland, less amazing. In fact, if you look at price structure, they are really pushing prices down domestically, but it's very expensive to travel overseas. So that we've estimated only that is 0.5 percentage point of growth, that height from just because people are traveling domestically. Right. So there's ways to engineer a little bit of growth, but I don't think there's substantial support, if I may say, on consumption. I'm going to go through all of these graphs before you ask the next question. But I have more for you, investment, exports, you name it, yeah.
Can I ask about cars in particular? Because they were actually a bright spot during the lockdown period, largely as a result of policy. So do you think this slowdown just reflects changes in policy rather than any change in consumer behavior?
The subsidies have been extended to 2023. And even though, it's just not as strong as, at all, actually, as expected, I think ultimately, many have front-loaded their purchases thinking the subsidies would end. The subsidies have not ended, but they've already purchased.
Right.
And then they're seeing their future, and employment growth is, numbers are very tricky on employment, but it's not really growing as fast as for people to think, okay, we're out of the tunnel, things are going to be great. And this is also related to demand for exports, yeah? It's not there. So I think people are quite, the mood, in my opinion, everybody I talk to in the mainland is very negative now, even with the reopening. So this is again Li Chan's point. If I get 5%, be happy. And they surely get 5% in my view, but it's not going to be splashing of growth everywhere that that you all enjoy, including Hong Kong. Yeah, that's we have the numbers for Hong Kong. It's not back to 2019.
Do you think that's the right approach for people like Li Qiang and the government to take? Do you think they should be doing more to try and drum up animal spirits and get people more excited about the economy?
Well, this is exactly Li Qiang's speech, in my view. Yesterday, it's very clear that he even said last year, maybe there were mistakes made on how the private sector was supported, and that's in a way telling all of us that there's going to be changes, more support. But the thing is, that's one story. But the other story is either creating additional, whether it's nation level data, a new institution for data sovereignty. I understand that goes well beyond CAC, in terms of management. Companies will basically feel that there's more and more filters, for them to operate. So yes, the mantra is you're back, but the reality is, where are the measures? Where are the measures for the private sector? What are the measures that will bring them back? I've not seen anything very concrete. So the animal spirits will be back only if they feel that, we're really back to what China was in 2019. I've not seen anything that would confirm that hypothesis.
That seemed like more of a message to entrepreneurs, but I'm wondering if consumers also need to be given greater confidence. If there's anything the government can do.
Well, yes, we've talked about vouchers. I don't know why Asia likes vouchers so much. I don't understand what's right about vouchers as an economist. It's like, oh my God, it's so regressive. Everybody gets the same voucher. Maybe people who are not very financially, able lose the voucher. It's like, my God, it's so regressive. So, but anyway, if anything, we'll get a voucher. But that's not going to solve. To have what we call automatic stabilizers, I know this sounds a little bit pretentious, but basically to have an economy that supports consumption across the cycle, you need some kind of welfare state. You need to have unemployment benefits. Something that works automatically, not that somebody wakes up and says, here are the vouchers. It's this place too. So I just wonder whether they can design something like that, because that's not about now. Now they are on a recovery, but what if something else happens? more vouchers, and I feel they need to get that ready, and this brings us to the fiscal reform in China. Well overdue, and I think they need it now with the local governments. But that's a big thing to do, and I've not seen any signs. I don't think this was a topic. So yeah, local reform, more local government revenue, stable revenue, more welfare state to make sure that you can create more consumption when needed. All of that.
I mean, if anyone from the Hong Kong government is listening to this cast, I'm perfectly happy with vouchers. It's fine by me. You talked about fiscal reform, and I suppose if we can't rely on the consumer, and we have heard a lot about this supposed pile of excess savings that is just ammunition, dry powder, ready to reignite the recovery. You think the excess savings story is a bit of a myth? What's your take on that?
I think it's quite a myth. China has always had excess savings. That doesn't mean you're going to spend your excess savings. And on top of that, how are these savings calculated? 80% of wealth comes from the real estate sector. I have a few graphs now, sorry. Bear with me, this is my book, as I say. So let me find here you go. So this is housing market. So what you have there is home sales. It's not even the price, because the price is still you have a little bit of a recovery this is the yellow line. There's lots of lines, but this is basically the 2023 change, basically in home sales. So, but you see, they've not, as the Chinese New Year ended, they are still they've stagnated. On land transactions, I'll come back to your, which is another way to think of, we're out of the tunnel. Yes, space. So they're selling more land. This is zero growth now, which was a number that everybody reported. But the value is still negative. They're kind of giving the land away to get some revenue. This is local governments. But now, your question on splashing these savings. The savings, 80% is housing. Yeah? If they were lucky and they had their housing in tier 1 cities, maybe they are still accumulating a little bit of wealth. Anybody else is doing worse. On average, zero growth in housing prices. Yeah? So their wealth has not increased. In the West, when the reopening happened, we had, to our dismay, because I think that was unfortunate, but we had a housing in Australia, housing bubble. We had a stock market bubble. So everybody felt richer after reopening. Here, people are not feeling richer. So if you are going to use your excess savings, you'll do it only if those excess savings feel like more after the reopening, not feel like less after the reopening. So that's why I don't believe in this splash in savings. And by the way, we don't see it anywhere. If they had to splash them, they should have started already, yeah? And we don't see that in the data. So to me, I think Chinese are going to be cautious about the recovery until they see huge creation of employment, like much lower youth unemployment. Basically real activity in the economy. I have to say, sorry to that we have a little bit of hope because of this. So what you need is, what we are missing here is investment. You need to see companies invest and employ people. And I say, okay, I'm doing fine, I have a stable source of income, I may go and buy an apartment or whatever. So the PMI, which everybody focuses on, is of course kind of the light at the end of the tunnel. But it is strange to me. Why? Because if you look at it, biggest increases in new orders, manufacturing new orders. Where are these orders coming from? And actually, even export orders. Export orders are ballooning. Who is buying? I don't know. It doesn't match the export numbers. Let's wait for tomorrow. Maybe I'm wrong and, exports balloon in China. But I see, China containerized freight not growing. So why are they so positive about export orders if they're not exporting? Maybe the future? Which future? Because, everybody's delaying the recession in the US, but it's not that we're changing our call, or at least put it this way. Especially after Powell's statement to the Senate. I don't think people are thinking the U.S. economy is going to do better. So why are the export orders, expectations of export orders better? So there's a disconnect, I feel, in the data, PMI data in my view, looking at very, offering a very rosy picture, especially about, I'm focusing on external demand because that's what we can control, which I can't see from the other side. And again, tomorrow we'll have the data and we'll see more about that.
I mean, it's interesting. So this is the Purchasing Managers Index, which is basically just an interview of managers in companies, asking them how their orders are going, how their business looks. And usually, when there are lots of doubts about Chinese data, people put a little bit more faith in the PMIs, certainly the Caixin one, than they do in the hard data. But here, you think the PMI might be sending a misleading message.
Well, maybe, you are, put it this way, maybe because you are reopening, you are becoming more positive overall, even about export orders, because this is what you think, not your export orders yet. So maybe they are generally positive. Again, this graph is about the whole PMI. So manufacturing is lower than orders, and export orders are the highest. So it's a little bit like hope, but hope elsewhere. But actually, elsewhere we don't see the export number yet. So it's a bit like the reopening is, of course, giving more faith, but the question is, are these orders going to come? Because the data for South Korea is terrible. Even Taiwan is 6 months of negative export growth. So
do you think there might be a backlog from the sort of lockdown period, people who didn't place orders during that time because they were uncertain about supply chains?
Yeah, maybe. Maybe that could be,
So we've talked about consumption being weak, external demand looks poor. Investment has many components. Part of it is entrepreneurial, but obviously what got China through last year was investment by local governments and by infrastructure companies. What's the outlook for that side of the economy?
Yeah, good point. That's so there you go. Local government finances. We could write a book. I mean, people have already written books about it, but I guess you can write the next book because this is the next one for China, in my view. So basically, what you have here is local governments basically have, as I would say, two lives. One is the on-balance sheet life, what you see, like there, as of already end of September 2022, every single province was in deficit. October, everybody but Shanghai. I mean, this is unheard of. So huge transfers. Now you wonder why they're cutting central government expenditure by 5%. This is another amazing announcement that, because the transfers are massive. Now, this, you may say it's because of land sales. It's not only because land sales. It's even the rest of the revenue was actually plummeting. And of course, expenses were ballooning because of COVID and beyond. We know that about half of the, sorry, let me see if I recall the number. More than half, I can't remember exactly percent, but more than half of the special bond issuance have gone to pay basically recurrent expenditure, whether it's salaries or you name it. So you can see the disconnect. They don't have enough revenue, recurrent revenue, to pay recurrent expenditure. This is the thing. And this is only on balance sheet. On balance sheet means what you see. But you see there, China on balance sheet local government debt to GDP ratio, is basically 28% of GDP, which you need to add to the 70 plus, which is central government. So we're talking about 100%, over 100% public debt for China, excluding state-owned enterprises, which I don't dare include, because if I do, everybody will tell me you don't have the assets. So don't do that because you only have liabilities. This is true for the central government too. I mean, when you calculate the US public debt, you don't say, oh, here are the assets. This is land in the US. I mean, you just but anyway, point is, if you do that, if I were to dare include SOEs, it would go above 180. And just one number on this, Japan, at the time of China's income per capita today, which is 12,000, more or less, 2,000 US dollar. When Japan had 12,000 US dollar, public debt was about 50% of GDP. These are the numbers. So the local governments, either there is a big fiscal reform, which I hear, I don't know, if some of you maybe pay taxes in China, I don't know. I hear from friends that apparently they're going to digitalize the tax system, that the tax pressure is going to increase enormously. I calculated effective tax ratio, corporate, for China, it was 12%. 12% is so low. So yes, there is room, put it this way, there is room to improve on this huge amount of public debt. But the question is, will they do it? Or is it, you were asking about the private sector. With 12% effective tax ratio, what if it goes up to 25?
And if we were having this conversation 10 years ago, I'd probably ask you, will they introduce a recurring property tax as a source of local government revenue? And now 10 years later, I can ask you, will they ever introduce a local property tax to provide local governments with a recurring source of revenue?
Would you do that now? Look at this. You need the market, you need housing prices to improve. Would you do it now? You should have done it before. That's my, don't cry over spilled milk, but the truth is, you do that in a boom. It's like another way of, as we say here in Hong Kong, macroprudential tool to control housing prices. Now you don't need it anymore, even here. But the point is, you don't do that when you want to boost prices. It's just very hard for China to, in my opinion, to introduce a property tax now. Because you want to sell land, you want to sell housing, and that's not going to help. So I think what you need to do is, especially individual income tax, because again, you said it, that's the savings, yeah? But then their disposable income is going, so the consumption channel is going to suffer. So, it's a tricky time.
So you're against consumption vouchers and you're in favor of higher income taxes. You're
I'm a European.
In
favor, yes, I'm in favor of a welfare state in China for very obvious reasons. Population is aging. You need to provide, in my opinion, and this is true for Hong Kong too. Basically a minimum amount of welfare services for your elderly population before it becomes a major crisis.
Sure.
So, yeah, if you need to increase your... again, effective tax ratio is very low. It's very, very low. The effective means, basically, it's very simple how you get the whole tax revenue, yeah, and you divide by GDP, not the percentage you're supposed to pay. No, what you actually pay. And it's very low.
Because the headline rate is quite high, but there are so many exemptions and ways around it, yeah. We've talked quite a lot about China's own internal momentum. We should talk about the spillovers I mentioned at the beginning of the conversation. It sounds from what you're saying like the spillovers to the rest of the world might be quite limited. What sort of channels are there through which China might affect other economies?
The most important channel is inflation, in my view, but for two reasons. First, that's what we worry about now in the West. Second, that's where China literally diverges with the rest of the world, including Japan. Nobody understands why China has so low inflation. We have 1% latest data. It's like, what's going on? You are recovering? You are in the midst of a recovery. You should have inflationary pressures, yeah? Pent-up demand, people go and buy, they go to the cinema, you name it. No, there is deflationary pressures. Why? Good question. But my gut feeling is that once upon a time, we used to call this, I don't know whether people still use this, engineered devaluation. We call it, meaning you put down pressure on domestic prices because you want to boost consumption. Maybe you don't want to use exchange rate. First of all, I don't think it's a good idea because there's a lot of pressure on capital outflows and you want to keep I would say, rather strong RMB. And you don't want to be the outlier, yeah? Everybody was appreciating against the dollar. Well, there was a little bit of a change in that, but you don't want to be the outlier that your currency is weak, what's wrong with China, blah, blah, blah. But you can engineer, which is, by the way, quite natural because you have excess supply, yeah? External demand is weak. So you can put a lot of pressure on prices. Example, electric vehicles. That's basically putting down inflation, yeah? Domestic flights. All of that, to me, is a very clear sign that China wants to keep competitiveness through prices, not through the exchange rate. Because I think China really fears inflation in the reopening. Because it's already, the lockdown has already been very unequal, if you see what I mean. Like, income distribution for sure has worsened in China. So you don't want inflation now. It's very, very tricky. So you need to keep those prices down to the best of your ability, and China has a lot of ways to do that. Many prices are administered, or again, flight tickets. I mean, most of the companies are state-owned, so you can engineer kind of a ticketing policy that favors domestic traveling, et cetera, et cetera. So to me, why do I say this is the most important channel for the rest of the world? Because I'm so happy with it. I mean, maybe, yes, this is giving China additional competitiveness, so be it, because the last thing I want to see is inflation from China, yeah? Whether it's for energy imports, but beyond, yeah? I don't want, many people focus on energy.
Yes.
They worry about energy, but what I worry most is intermediate goods. So solar panels. I'm quite happy that they don't have, there's no inflation on solar panels. That's probably most important for Europe now than even oil. So China's intermediate goods, it's about a third of global exports, more than overall exports from China. China's global market share in exports is biggest for intermediate goods. So you don't want those intermediate goods that are flat in Europe, or the US for that matter, to suddenly see a huge increase in prices because of China's reopening.
Right.
So that's the main channel, and it's going well for us. It's probably going well for China too, so let's leave it as it is, yeah.
I do want to open it up to questions. Please feel free to raise your hand, and I think a microphone will come to you. While you're thinking of a question, I'd like to focus, if I could, a little bit more on gas. I mean, you mentioned you're from Europe. The big fear a couple of months ago was that Chinese reopening would put pressure on the global gas market at a time when Europe is still trying to adjust to the war in Ukraine and the curtailment of gas supplies. And that Europe really got lucky this last winter and couldn't count on getting similarly lucky when the next winter approaches, given how unseasonably warm temperatures were. If we have a cold winter next year, if Russia's still curtailing supplies and China's also reopened, is that not a potential recipe for inflation through gas prices?
Well, yes, I mean, undeniable, but I think this is very dynamic. So basically, we are assuming here that China's economy will grow faster in the third and fourth quarter. The worst of all is the second, because the base effect is very positive for China. They only grew 0.5 or something. I mean, it's like third quarter, yeah, it was bad. Fourth quarter was actually 3.9. So China won't grow fast in the fourth quarter, number one. I mean, the demand, my point is, I doubt China will be such an engine by the end of the year, because basically the cliff is next year. The cliff is next year. If China manages to grow 4% next year, I'll toast. Because next year is going to be hard. It's the opposite. It's like nothing is in favor. The reopening is finished, and there's no base effect, and so on. So thinking that China is going to push gas prices so massively at the end of the year, to me, is already a stretch. Secondly, Europe is doing stuff. I mean, it's not for a change, but on this specific field, you can tell that long-term contracts with Qatar, also China, but not only China, Norway, lots of things happening in Europe to indeed reduce we have figures of the amount of exposure to Russian gas is like literally 20% of what it was. So, yes, there is pressure on, and by the way, we forgot, and China's going, Europe, average growth was 3%, is going to be 0.5. So the demand for gas is going to be less. So, I think the story that next winter will be terrible and we manage to survive this winter doesn't make sense to me, because this was the hard winter, right. Wasn't it? I mean, so yes, we can push the story, but we need to have a reason for that, yeah? I mean, 2022 was high growth for Europe. only at the end, but the average growth was high. And the problem was really to go into a transition in a very short period of time, but by, say, end of a year, I think the situation won't be as bad as people fear, in my view. We'll have other problems, but I don't think that's the biggest problem, in my view.
Any questions for Alicia? There's a gentleman at the front here.
Yeah.
Good morning, everyone. Thanks, Alicia, for a very interesting talk. I wanted to ask a question related to your chart on steel prices. So the MPC is now out of the way. We've seen the targets. It looks like a continuation in terms of monetary and fiscal support, at least on paper. The fiscal deficit was 3%, up from 2.8%. But I'm sure your expectation of the fiscal deficit last year is much higher. So could we be in a position where we're actually contracting fiscal spending, and what does that mean for global commodities?
Is this what you mean? I didn't hear which graph.
The increase in steel prices.
Yes.
Yeah. Here.
This is actually volume. This is volume. This is the reason why I put this graph is that I wanted to, because you know what, when during the period we didn't have data because of Chinese New Year, I wanted something on production. And this is the only high frequency data I could find. So I wanted to, and the volume was collapsing at the beginning of the reopening in early January. It was really bad, but it suddenly turned, which to me was a sign that PMI was going to be good. So we use it this way. So just to clarify, that is not really prices, it's actually volume, steel production. But your point is really about the fiscal deficit. I mean, these numbers on the work report on fiscal, I just don't read them. I'm sorry. It's just every year is the same number. We go 2.8, and you know, I'm sorry, but I don't know how they can publish that number because that's only the central government. I mean, like everybody knows. I mean, you just need to read the IMF, not me. Just read the IMF, and you will see something called we don't even have a good name because it's not consolidated. You know, we economists tend to consolidate the fiscal. It's a humongously important data for anybody, yeah? Consolidated fiscal deficit. It includes everything, the central bank, the SOEs, the local governments. Well, we call it...
augmented, I think.
Augmented, because we don't have a name. Only China has this. Augmented, of course, not that they produce it, we analysts produce it. Augmented fiscal deficit. Carlos probably has it too. So this deficit, which adds, so it's not perfect because we cannot consolidate. We cannot, might be exaggerated because again, maybe part of the issuance is held by another local government, so its net would be smaller, say, if we're lucky. But it's hovering around 13% for God's sake. Even if I net it and I put it in the gym, say it might be 8, but certainly not 3. So you know, by offering these numbers, nobody reads them anymore. I mean, why not move to a consolidated fiscal deficit, in my view? Now, what you have, which is real, is public debt. There you can see something. Again, we don't have full consolidated public debt, only central government, but even the central government debt is growing. So you can sense that the fiscal situation is worsening. We know that. How much, unfortunately, we need to make up a lot of assumptions. But to me, local government debt is a big thing for China to think through. That I would focus, you know, as an analyst, Carlos, help us focus your research on local governments because I think that's where a lot of the action is going to happen.
So
Yes.
So the question was, could we see tighter fiscal policy?
Yes. Okay. So again, because I don't know what's the fiscal deficit, how on earth can I know whether it's tight? I mean, literally, it's very hard for us to know. But I would put it this way. Because, okay, first of all, many people think China has not conducted expansionary fiscal policy for a long time. I think 2021 was surely expansionary because 8.1 growth, it was above potential. Last year, maybe it was tight because growth was below potential, but fiscal revenue collapsed. So I would put it even more bluntly, Carlos. I don't think they can use fiscal policy because because they don't have automatic stabilizers. So basically, a lot of the action, they cannot, how would I say, to run countercyclical fiscal policy, your design needs to be such that you can do it, if you see what I mean. And I think this is so ad hoc that I feel like the only thing they control is, frankly, is a special bond issuance. That's what they do. Every time they have a problem, they issue more, they front load the issuance, as you know, and they issue more. But they don't work with the, economics, we call it below the line, the financing. You work on the financing, but you don't work on the design of revenue versus expenditure. So in that regard, I don't know whether we can even talk about the fiscal stance. Because what they do is, when there's not enough, I issue. Then it could be quite tight, and suddenly it's very expansionary, because they just issue all of a sudden a huge bunch of. So I've given up on writing expansionary and tightening. Another thing that I've crossed out of the reports. Yeah.
And the headline figures, the central government figures, they always delight in pointing out that they're within the sort of Maastricht criteria. I mean, as a European, you should at least be tickled by this tribute to.
Yes, we've forgotten about Maastricht criteria a while ago, so that's one thing that maybe will disappear also in new reports. I don't know.
You briefly mentioned that the government announced that they're going to cut the headcount of the central government departments by 5%. Do you see that as a sort of money-saving measure, or is it a PR gimmick? What's the rationale for doing that?
By the way, there's a question of this, just because I know it's on your left.
We'll come to you next.
So. This is a very important topic. Why are they cutting? Well, why are they cutting salaries? Mainly all regulatory agencies, PBOC. The last time I've heard this is actually in Mexico. When López Obrador won the elections, he announced that he would cut the salaries of Banxico, Bank of Mexico. This meant everybody left. So the question is this, of course, I have no idea why they're doing this, but it has enormous implications on talent. By the PBOC, is this related to the new agency? Is this related to the PBOC not having, supposedly, Rebecca knows more than me, but they will possibly keep macro-pro, but the rest, the PBOC is losing every supervisory role. Is that a way to accommodate newcomers doing the job in the new agency? I don't know. I mean, but 5% is a lot. It's well beyond the PBOC. You need to sack the whole PBOC to save 5%, So I would say there's two things here. Accommodating a new agency is a tiny bit, but it's clearly demonstrated, in my view, by the fact that they're cutting the salaries of regulatory agencies, including the PBOC, or that's what they say they will do. Secondly, the 5% is broader. I think that's making fiscal space, in my view. Fiscal space.
Right.
Yeah.
I suppose the one difference in China to, for example, Mexico, is that so many of the bankers are in state-owned enterprises, and they've also been told to cut back a little bit. So the regulators' salaries are coming down, but there's also been criticism of financial excess and hedonism amongst the commercial bankers. We had an article in it in The Economist. It was called the Anti-Party Party, because it was pointing out the Communist Party was against this sort of financial exuberance. We had a question over here, please.
Hi, I'm Tu Hanshi from Headland Intelligence. Two questions. Is it true that just virtually every local government in China is in debt, including the rich cities like Shenzhen and Shanghai? My second question is, supposing the US goes into a deep recession with something like the SVB crisis, do you think the Chinese government will put up measures to help save the Chinese economy and help save the world economy?
The first I didn't catch fully.
It was about the extent of local government indebtedness.
Yeah. No, I mean, net is around 30% of GDP. And I don't know what's the stock for Shanghai and Beijing, as you said, but I know that the flow was negative in 2022. So everybody was in deficit, as I said. And beyond what I showed, that's only on balance sheet. It means you still don't have the LGFVs, the local financial vehicles, so it can be much more. So yes, I think that's big. They need to increase taxes. I'm sorry, they need to increase taxes. They need to, shrink this. It's not enough to kill financial exuberance is the fact you don't have a tax base. You know, that's why people go and issue stuff here and there and use local government financial vehicles and so on. I think the model is, as we say in Spanish, te buscas la vida. Only Carlos probably understands. It means you find your life somewhere. I mean, you find your money somewhere. That cannot be a model for a country of $12,000 per capita. It's just not possible. You need a tax base, you know. So I think they need to reform that. I don't know whether they will, but yeah, there's a lot of debt in every single, in my view, local government as a whole in terms of maybe not the flow this year, maybe they have a surplus, some of them, but overall the debt burden is very high. I mean, I read in Caixin, because it's very hard to calculate. I have a calculation, but I don't know how good it is, of the amount, the increase in debt service. You know, interest rates are flat, but the increase in debt service is humongous. So this means debt is piling up because it's about the volume, yeah? I mean, they're putting down high yield, we know, I mean, high yield coming down in China, and then you see that debt service doubles. So what's going on here? There has to be much more debt. So that's one. The second, sorry, my brain, I forgot the second.
It was our first SVB question.
Yeah. Will China save itself, not the world, because the title was the world. The world, I think by now, we didn't even say that China is not importing anything since 2021. Flat. So China will save the world if it doesn't create inflation, because if it did, it would destroy the world. So yes, maybe the answer is it will save by not creating inflation. I forgot that we need to answer the title of whoever came here. But will China save itself out of a crisis that's in the West? How can China save itself? Well, first, China has done well, if I may say so, given what we are seeing in the news, by not opening up. I mean, capital control outflows, yeah? It's so hard, even harder than before, to get money out. So that's good, because that's what you need to. By the way, I'm not sure where the money would go, because there's a crisis elsewhere. So maybe to start there wouldn't be much demand, yeah. But secondly, does China have the space? Sure. The PBS is one of the very few central banks in the world that has done no quantitative easing. So they can still do something. They have still some room on the monetary side. Interest rates are high compared to global, put it this way, not high compared to global standards today, but high to where they went during COVID in the West. So they could do exactly the same. They can cut reserve requirements, So I think China would save itself. Would it then import from the rest of the world based on COVID experience? No. It would export to the rest of the world. What? Green technology, you name it. By that time, maybe the rest of the world will not buy from China, because if we have a crisis, no matter our green transition, we forget about the green transition, and they are not able to sell even what they're selling now. But that's kind of the dynamics of it. Long story short, the answer is yes. Yes, for sure.
Any other questions? Ken?
Alicia, you probably answered this in some context, but the concern is that with the demand from China, typically when tough times ahead, people tend to save. So what are the implications for global consumption demand? Because a lot of economies planned for China bouncing back, demand from China coming in. Yeah. And also there's been an excess manufacturing capacity in the world in the wake of the COVID pandemic.
So your question is, should we all, here in Hong Kong in particular, be waiting for Chinese consumers? That's your question. And then I think the other question is more like, will China continue to increase output? Is that, yeah? Is it global output? So the first question is, as we speak, not yet. The level of Chinese tourists globally, travelers overseas, is still well below 2019. Why? Some people say it's the visas, it's here and there. They start, giving away, say in Spain, 50th anniversary. How suddenly Chinese tourists can come. So why can't they come before? I don't understand how you can decide anyway, whatever. Say that eventually they can go everywhere, and then you have the pool. but they're not going, even here, yeah? I mean, at the beginning we said it's the quota. No, the quota because the quota was lifted. We said it's the visas. I just got a student of mine saying, I'm coming to visit. She got the visa in what, 24 hours? I mean, it can't be the visa, so what is it? Why aren't we filled? Why can't, I thought I would not be able to walk in Hong Kong. It's quite nice. I mean, so where are all of these visitors? And I think the problem is that money, disposable income. Disposable income. I think, if prospects are not very good, you may as well wait, yeah, to see how things evolve. So I think, no, I would not be waiting with my shop open somewhere in Paris and with my Vuitton bags. I don't think that's going to happen, frankly. No, I don't see that. And global output, yeah, which is deflationary, which is good for the rest of the world, which is deflationary. I think China will continue to increase output because the other reason is China needs to show it's cheap. Again, going back to my point, because the reshuffling of the supply chain is happening as we speak, big time. Foxconn following Apple, everybody's moving and finding. So China needs to show that it's up for business. Sometimes we feel a little bit discouraged in terms of regulation, data sovereignty, at least cheap. I mean, that's the easiest thing they can do. So I think the mantra that China will create inflation globally, blah, blah, no, because supply will increase, demand won't be so strong, and they want to show that they are up for business on the price level, on the competitiveness part of it, and they don't want to use the exchange rate, which I wouldn't do either. Because the last thing you want to do now with the market that we see is suddenly the RMB plummets. I mean, that would be crazy. So I think they need to use prices. Yeah.
Thank you, Alicia. I see we're coming up to 10 o'clock, so we should probably end it there. We're all on the lookout for unofficial alternative indicators for China's economy. And you mentioned the ease of walking in Hong Kong. I live in Jordan, and so my unofficial indicator for China's reopening is how long does it take me to walk down Nathan Road from Jordan to TST. It does seem to be taking a bit longer, I have to say, so I may be a bit more optimistic than you.
Good.
Thank you, Alicia. That was very enlightening, and I think we've got an answer to our question. It's a paradoxical one. The answer is that actually the positive spillovers from China to the rest of the world will be quite weak, quite limited, but that's actually a good thing because of the inflationary pressures the rest of the world is tackling. So, Alicia, thanks ever so much.
Thank you.